Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 20th of October. Hope you're doing well. We are continuing to see just amazing weakness in the bond market. It is continuing to sell off badly today. That is driving mortgage rates to their highest levels going back to December of 2000. So we are sitting at 22-year highs in interest rates. Today, the Mortgage News Daily tracking of a 30-year fixed-rate conventional loan is at 7.37%. Last week, we were at 7.1%. That means we've had 2 solid weeks now of rates over 7% in that daily tracking poll. So we may be saying goodbye to 6's for good, folks, or for at least the foreseeable future. And I'm looking forward to getting into a new norm where the panic of the market kind of subsides a bit and we get to some normalcy. Because, you know, historically, if you look at what rates have been over the last 40 years, I believe you would find the average in the high 8s. So rates, even though we are sitting in the 7s, that sounds uncomfortable for a lot of us, but historically, it just ain't that bad. What is alarming, though, is the rate at which rates are increasing and the other economic concerns around inflation and just a number of issues that are rattling the markets and causing some folks to basically hunker down. Once we get back to some normalcy in the market, I think we will see buying normalize, and some of the more skittish buyers that are out there will be a little bit more committed. In any event, 22-year highs in rates, not good, but let's talk about some of the things that are good. We're seeing the Dow respond nicely over the last 2 weeks. We're up to 30,305 today. Market's not closed yet. I'm recording this at 2:30 p.m., so we've got about another hour of trading to go. That puts the Dow up almost 700 points from this point last week. The Dow is basically looking at that last week's consumer price index as likely being the highest, most damaging report of the year. And frankly, the bond market ought to be, but they're not. The bond market is very much pricing in every conceivable worst case scenario going forward. And if those scenarios aren't realized, we may actually see some improvement. What that's all leading up to is the Consumer Price Index report. I believe that's on November 10th. The one that's coming up next, that will be after the elections, and it will be a strong read one way or the other on the direction of the Fed. So that report is shaping up to likely be the biggest market mover for the year. It's going to be interesting to see if we see some weakening, as is expected, in the rate of increase in inflation. Then we may start seeing these highs weaken a bit and may even see these come down a bit. In any event, that's what's moving the market this week. Call me so that we can look at specific scenarios, y'all. I am seeing more and more seller concessions being built into deals. I'm seeing a lot more first-time home buyers able to buy in the current market because of this weakness, frankly, because we've got more willing sellers on the other end of the deal. As that continues, we're going to continue to open doors for buyers that have been shut out over the last 3 years or so, and we are looking at very unique ways to get those folks into a house and get them closed. So call me to discuss those scenarios. I'm happy to walk through them. My bread and butter is working with clients that you refer each and every day. That is literally what we do here. It's the reason we provide you with these updates, hopefully give you some information that you can share with your clients. In any event, hope this is helpful. As always, you can reach me at brycehomeloans.com or just reply to this email when you get it. Look forward to working with you soon. Stay blessed, stay safe. We'll talk to you next week.